Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, December 10th, 2023. It's a little bit after 10:30 a.m. here on the East Coast. I'm Wayne, and we're going to get into our usual stuff. Here is our trusty disclaimer, and here is our trusty intellectual property rights notice. And then we're going to cover the stream for the week. Leave it up there for a few moments and I'll flash last week's as well. And then we'll do our usual reposition and start getting into it more heavily. So can quickly talk about last week's summary there at the top, but we did kind of lean towards a mild pullback. Really, I didn't really get one. Again, kind of, I guess you maybe could argue you did, maybe you could argue no, not really. But ultimately, right, it was really, I think, another pause. And you had to just be prepared for anything when you get as overbought as we've been. But the outcome really was that they got the pause, and that's been working really well since they bottomed things out near the end of October. And trends have basically been arrested, but not not reversed, not even really retraced at all. Excuse me. So again, that removed overboughtness from the market, and frankly, the trend and support pretty much in the big four is still there, right? Mainly SPY and Qs, but it's all there, really still intact for bulls. And that was probably about the fourth time, I'd say fourth week in a row they've been able to do this. So they handled things really well. They kept that bullish complexion I just noted in place. There's very little give back, which is usually right a sign of strength. I think the Santa rally is teed up that they talk about incessantly as we get near Thanksgiving and so on. That is really teed up if they want it. And next year, as we've been noting for some time, is the second best of the 4-year cycle. So on that, let's flash one more just from last week, leave it up there for a few seconds. So a few things have changed, but not too much. Unfortunately, we really can't be as have a strong lean, I don't think, right? It's clearly, the reason for that would be the FOMC. So excuse me, still getting over this cold, but it's a little bit better overall. Let's see if I can reposition us, probably would be the way to go. Just bear with me for a moment, get this out of my way, and I'll drop this over here for now. Let's bring back the charts, and that will probably be share number 3. Yeah, there you go. So right now we should be checking out the Mag 7 as a package. And the reason I'm starting with this before I get back into the notes is because I did a little bit of research, and I don't think there's anything surprising about this. So let me just bring this over rather than just talking about it. Let me just bring this over here a little bit. This should help us on the screen. So hopefully everybody can see the CNBC, but I want to jump ahead to here. So, excuse me. I think that I can't really testify, right, that this is the best source of this information, but it sort of confirms what you would expect, that, right, these are some of your most widely held, right, most heavily owned names, and you could see what they are, and it's exactly what you would expect it to be, really, right? It's Microsoft, Amazon, Google, Apple, Meta, Nvidia, right? And Tesla's not on there, but that's part of the, I think that's considered part of the Mag 7 mix. But the biggest of the big, right, are what's most heavily owned. And so since they all own that, I'm sure many of the gang members would love to see those names really print at the best possible price that they can in terms of going out for the end of the year, right? Nothing makes you look more like a genius than to mark those up from here and look, I've got those. I have all these winners, and they did great. So what we have to look at, I think, excuse me, is that just the very basics, which is that there was this very strong rally that we started last October, not the one that just finished, but in 2022, they rallied that very strongly. and that happened, in the markets as well as the Mag 7. And then they gave us this nice sort of corrective consolidation that went on for some time, bottomed things out when, again, I think the markets were really setting up for some sort of a rally attempt. I didn't know it would be as strong as it was, but we did note at the time that the market was rife with just many conditions that precede relief rallies. Well, we got that and then some. One of the strongest monthly performances, I think they said, from bottom to top in maybe, I don't know, I think it's 30 years is what I heard, top 7 in 30 years. So really a heck of a month when you think that the NASDAQ tech stock bubble mania was part of that, in the late 90s. It is just a remarkable number to print, right? That you're that good. But if we look at this now, knowing that the gang really would like to put this higher, right? You have this incoming uptrend, you have this corrective action, you have this launch, you break out, through resistance. And interestingly, these names came back, and it's just difficult for me to speak with this condition. These names actually came back too and touched and held, our former resistance line. So that's for all those old time chartists out there that love to see the breakout, the pullback to that level to confirm that it can be held and then go again for it would be the next leg higher. And so that's all there. That's why I'm starting out with this, because they are the big names. They are the ones that are owned by everyone. They all have a lot of players have an interest in seeing these things print higher. They look like they're trying to work their way back up to and possibly through the highs as we sit here right now. I mean, if you look at sort of down here, you can see that on some of these indicators that are basically trying to measure momentum, right? They've been bleeding momentum or losing momentum or haven't had momentum or have had downside momentum, whatever you want to describe it, for weeks. And now they're sort of getting themselves re-energized to a degree. And I think, unfortunately, this is where the video this week gets boring. I don't know what the FOMC reaction will be. I think that's the wild card that we know. We know that could be a market mover. There's so many ways to argue it. I think that the market is ahead of itself. And I wouldn't be shocked if Powell makes it clear to them that they are a little ahead of themselves. But does that really derail what they want to happen? Is my take wrong? Maybe they're not ahead of themselves, right? But will they still rally? Will they still rally it anyway? We know that really under almost all conditions that are not really 180 the other way in terms of, okay, there's awful news that's hit, whatever the case may be, geopolitical, what have you. We know that there's this bias towards rallying into year end. I mean, all I really have to do, which I should be doing right now, is to get us back over to here. And then this is what I can jump to. No, that's not it. Oh, wait. Well, where was that? I did have another one lined up here. I'm surprised. What did I do with that? That is okay. Yeah. So that's not it. I don't know what I did with that one. I thought I had another one up there, but the seasonal pattern really is that you have a very strong December performance, right? So here's all years, and we'll probably have to look at all years, but you can see that even in all years, the Dow or the S&P, you can see December tends to be very good and tends to get marked out in red at the high. And now this is definitely true in the third year of the cycle, which I thought I had a graphic for. I might have clicked on that and gotten rid of it by accident. That was really right next to that tab right there. So my apologies for that, but you still get the idea here with December in the S&P in all years, right? So we're approaching the midpoint where things bottom out. By the end of the week, we'll have reached the midpoint, and then they typically pull the run and gun, right, or the Christmas goosing, holidays goosing starts to happen. And that happens in all years. So that's really set up to happen. What I'm trying to show here is that these are the big dogs, and they are also set up nice technically. They did something that's even better than what the SPY and Qs did, because they managed to pull back, which a lot of people love. And what this has done is it has actually brought the overboughtness out of these. These are just not overbought. It's just stating a fact. Like, as far as RSI goes, on my views, they're not overbought. So if a gang wants to really mark this market up, they can start in these names, which they already love anyway, and they can mark this thing up, and they probably won't even reach overbought in a big way by the end of the year if they start buying. So that's really what's set up probably to happen. And just let's not forget, we'll go back to it too. Let's not forget that in this situation right here, the pre-election year, which is next year, it's the black line. Look what happens in January, really into the spring. The old sell in May go away. It's really good, but then because of earnings reports, it tends to be, probably is my guess, it tends to be very good all the way until there. And then the uncertainty of what happens in the presidential election starts to take over, along with the summer days, right? You get that, and you get the uncertainty. And then once the election's been sorted out, then they start, and you're past the election, they start to re-goose, as always, into year's end. So that's what I would keep in mind. This is really not favoring bears, right? The historical precedents just do not favor bears. And that's why we've been saying this and tracking these things. And we're not even saying that this is a lock. It's just that this is what typically happens, right? Year in, year out, all the same kind of pattern cycles that play out. And the one thing that's worth noting, though, is probably, since we're here on tabs anyway, is that these yields did really crash hard. And so it's possible, right, that these things, longer term view, it looks like it's still ready to keep breaking out. This is the interesting part for me anyway. That still looks like it's holding on nicely, and it did kind of come in really hard, right, lately. And so you could really see a little bit more of a you would expect, right, there might be a little bit more rally potential, because this thing has gotten smashed so quickly. Just a little bit, about 6 weeks ago, right, and you're at the top, and now they've just crushed this thing for a full percentage point practically. So you could expect a little more retracement at that point, but clearly, right, the whole problem is, and it doesn't matter what I go through with a 10-year, 20-year, 5-year, 2-year, 30-year, whatever. The point is, right, that FOMC, whatever Powell and company do and say, and the reaction to that, unfortunately, is probably going to be the big news of the week that's going to hold sway, and it may set the tone for the rest of the year. This is nothing new. There's no rocket science that I'm dispensing here. I get that, but sometimes you just have to state the obvious. The obvious, too, is that they're expecting things to just sit tight. And some of these expectations were leaning more towards rate cuts from where we are right now. Now they're sitting tight, right? It still favors we sit tight all the way through March, whereas a week ago, they had us going down as the clear favorite. That's what they had. So this is definitely sort of firmed up a little bit, I would say. You've got to get out to May now rather than March before you get the probabilities favoring rates sliding. So I've also seen some stuff from people that no one pay attention to anymore, that they think that there's very subtle hints showing up that inflation is coming back a little bit. So of course that won't show up in the government reports, and it certainly won't be highlighted by the FinTV cheerleading squad, but it certainly is interesting that that's the case by people that are a little more serious about things. On a side note, sentiment did back off slightly. I don't think there's a lot that we can make out of this, but a lot more people, the bearish number really jumped. right? So a lot of those uncertain kind of neutral players really seem to have jumped into the bear pool. That, of course, I would take that as really contrarian. And that also sets up for issues. And another thing I would add to this mix is that this little note here, down here, which I've also come across some information that suggests that you're going to be surprised by this, that hedge funds are actually selling the Mag 7 heavily again. So, excuse me. Excuse me. They really are gluttons sometimes. I mean, excuse me, they may be right, of course, but it just seems like I get that they think some of this stuff is overdone. I get it, but you might want to pick a better timing window. The timing window to fight against those names seems to me to be really a poor one. I'm not saying they're wrong. I'm not saying they might not, it might not work. It's probably dependent on what the Fed does. But if they can interpret the Fed commentary, Q&A, the whole thing in any positive light whatsoever, they will. We know that. We know that they're going to take everything, especially at this time of the year, and try to cast it in the very warm, cozy, fuzzy candlelight by a snow-covered window, right? And you're there with a blanket on. It's all good. That's what's going to happen if they can do it. So Powell would really need to trip things up in a big way. He'd have to really do the old squirrel in the Christmas tree maneuver from Christmas Vacation to really screw this whole thing up for them to not try to spin it that way or have no chance of spinning it that way. So that's really the expectation. The trend is right. The trends are up, and that's the thing. If we go back to the very basics, we have to say the trend is up. The correction happened. The trend is up. They did retrace. They found support where you would want them to, almost like textbook. And now these big players are going again. And if they bust this thing out this winter, it could be off to the races. And the only reason why I would not fight against it, besides from like sort of like a valuation standpoint, if I think about it that way, I start thinking, well, this is really way ahead of itself. But having traded through, the late 90s in that tech bubble, this is nothing. That's the thing we have to remember, that this type of valuation is nothing. And a lot of these companies, despite all of the accounting gimmickry, right, that they've got in place that everyone glosses over at the very most or doesn't even pay attention to whatsoever, they're money makers. I mean, it's pretty hard to say that Apple and Microsoft and so on and so forth are not money makers. So these aren't your whatever Razorfish or whatever, something, pets.com or some of those infamous companies from that era. These are legitimate powerhouse companies that make products and deliver services that people pay for it for real, and they have margins and they make money. So I'm not converting into a bull. I'm just trying to objectively take a look at things as usual and say, look, like, even if you have a hard time with it, and trust me, I still do. I still don't believe I still don't believe we're out of the woods economically. I still think there's deterioration. I don't think things have turned around in a positive way yet. I see nothing from the long-term people that I like to keep an eye on that have said anything that's changes my mind about that. But we don't trade it that way. And so I think what you have to do is get ready for this. But again, getting back into my kind of notes on this, it's always really this anyway. That's why I've been leaving this bottom line up there, because it doesn't really matter, right? All this stuff we talk about, you can get it into your you can bring it all into your calculus, but in reality, whatever they're going to do, they're going to do. And you've got to deal with it. That's how we profit in the short run, is by dealing with what comes our way. So we have to, regardless of our thoughts and this, that, and the other thing. But I really do. I think the problem is all these things to me still seem primed to go. There's still a wall of worry. I am myself am part of the wall of worry. The only difference is I wouldn't position myself that way. I'm going to position myself in line with the charts because they're the only thing that doesn't lie to me consistently. The rest of Wall Street, I know, lies to me consistently. FinTV lies to me consistently. The government lies to me consistently. All that's all just a series of deception and lies for me. But the charts, the price action, it's the most real thing, we can bank on, even if it is sort of bogus in itself sometimes. And I think that's clearly the case. But I can talk about this for hours but I really need to come back and just say it's all about really what the FOMC does. And just remember, I think the FOMC is going to be spun positively, if at all possible. That is really how I look at it. I don't think that they're this close to the goal line, the finish line for this year, and they have a chance to mark things out like champs. Why would they route things right now when it's going to not make them not look as good, so on and so forth? And really, it's at odds with the trend. It's at odds with the historical precedents that we've seen. And we also can say that hedge funds are shorting those big names again. Those are the most heavily owned, where they want to mark those up. They mark those up. They mark the market up. They mark those up. They mark the biggest holdings they have up in their portfolios. And we all know they're all about making themselves look good. I'm going to drop the excuse me from here on out in the name of time, right? Just to save time, because I'll probably have to keep clearing my throat. But anyway, that's the reality of this nasty cold for weeks. Now, look, here's SPY. Okay, I'm jumping to SPY. This hasn't pulled back. And this gap really tends to frustrate people. But if you go back in time and look at what happens, they do these things, and it can take months. It can take months. It can even take years for these things to ever really be addressed. And I'm not saying to give up on it. I'm just saying that this thing, look at this. I mean, look at the complexion of this chart. They have just done a tremendous job of holding things after a run. They just give it a pop, hold, give it a pop, hold, give it a big pop, then hold, right? So this is what they continue to do. Very little retracement. That means it's probably still people on the wrong side. As I said, I think at this point, it was 6 weeks ago when this first started. I said, maybe even longer. I said, I think I might have been traveling, or it might have been just after that. But I think we said, you got to take this seriously. I wouldn't. In other words, when this first burst happened, we said, we can't say that this is something we would not take seriously, knowing what time it was, so to speak. We know what time of the year it was. We know what the conditions were. We know what these players like to do at the end of the year. And so remember, the Mag 7 pulled back and backfilled and held support and converted that former resistance to support, held it, and is primed to go. It hasn't really gone yet. The SPYs, meanwhile, are still right. They're making a new high, right? If we bring in more data, they are making a new high here. So all they have left is here. And we said, I think at the time, that we thought they could definitely get all the way back to here. And then a little bit later on, we said they could even conceivably be back at the highs that they put in earlier this year. They could. And so I think that's a possibility, right? You have to admit that it probably would be really strong performance, right? If they can put together really a 4% move between now and the end of the year, that would be a heck of a run in just a few weeks. But we've seen them do that like it's nothing. And like we've seen, I think personally that my opinion is that the Mag 7 has the technical right stuff to do it. It all comes down to, can the FOMC meeting not hurt them, right? What are the chances that hurts them? If it doesn't hurt them, I really don't see what's going to stop them, unless somehow rates, you would probably have to say, unless the dollar starts shooting back up, rates start shooting back up, you still have to keep your eyes on that. But I don't see why, under most scenarios, I have no idea, unfortunately, what Powell's going to say. and he might emphasize something, and it might be a warning to the market that you're getting ahead of yourself. That could be interpreted that way. That would be all bets off, and you finally see more profit taking, and some people saying, I got to book what I've got now, a lot of what I've got now, because this is still a good year, and I don't want to get caught up in a correction here. I'd rather start, have some cash if there is a correction, and then start putting money to work for next year, which is a good year. So just keep that in mind. But I don't know what, if you're looking at the charts, I don't know, I think that I don't know what you can really say bad about them, other than maybe the SPYs are overbought. Maybe the Qs are a little overbought here. I mean, they're not really super overbought, right? They have backed them off. So, this thing's right near this high right here, right? The Qs are. And again, like, it's very hard to say bad things about the complexion of these charts. And they even have like cup and handles in there. There's inverted head and shoulders, that depending on how you want to look at it, you're only here, you're about, again, 4% away from the all-time high. Now, despite everything, right? Rates went up so much higher than what the Wall Street clown show was talking about way back when. And they're acting as if it doesn't matter. I still think it can be a bull trap, right? A longer term bull trap. You could still have a phenomenal start to the year. Everything looks wonderful. Everybody's all sucked in. The whole works. But I'm not banking on that as of right now. I'm just saying, I don't discount that. But right now, I feel like it would be surprising to me if we just assume FOMC reaction neutrality. It would be surprising to me for them to not try to goose this stuff back up. And so in a weird way, this market is probably a little undervalued in this sense, because there's been so much inflation between here and here, right? So if you say, well, this should have inflated more, you might be right. I mean, maybe that's part of it, right? Maybe, right, these stock prices and the market, the indexes need to inflate to keep in line with inflation. Maybe they're underinflated. I'm not kidding. I'm just saying it's kind of ridiculous, but that to me is a thought, that it could be underinflated versus where it should be thanks to inflation. But we'll see, right? I think there's a lot of bullish stuff going on. It's very easy to be bullish in terms of all the technicals, other than maybe a little short-term overbought. But it's, again, coming back to FOMC, don't even want to keep mentioning that, but that's it. And here's your SMH, right? The SMH had this monstrous move, and they've got that up and through. We had this line waiting there for it for a while. This is nothing new with this horizontal white line. They did the old breakout right through resistance, came up, right? Then we said there was another level up here that was sort of like a flat. They came and played around with that level, and now that they're up and through that, and if you look at this, right, this is obviously like a leadership area, and I'll talk more about this in some of the other sectors and sector situation. But if you look at that is on the cusp of breaking out too. So the way that they own NVIDIA and so on and so forth, again, it would behoove them to mark that stock up, and that would help lead SMH, and it would break out. And remember, there could be a strong leg up, corrective activity here, and then you could have a whole nother leg that develops, especially the way the fourth year, the election year, right? That election year that we are going into, especially the way that plays out. Mainly the first 6 to 7 months of the year are solid, right? Into May, you're solid. So, excuse me. So with that, you've got to say, this thing's all there, right? The only problem they have, I think, right now is Powell. And that would be the question. Do you get some Powell reaction selling? And does that set them up more for Thinkorswim's giving me a hard time. Let's give it some time to sort itself out. If they do get the Powell, pullback off of Powell and the FOMC, does that kind of a nasty 1 or 2 day smashing, do they then just give them an excuse to come right back? And that's why it's a problem for us, because we just really can't, there's nothing we can really do or say about it. That's the issue that we have, right? You can't get too confident because you just don't know what's going to creep out on Wednesday. And that's just the problem in a nutshell. But to me, right, this stock being occupying the place that it does, if it takes out the 20-day right there in light blue, and Thinkorswim's clearly fighting with me, as you can see, but if it takes that out after bouncing off the 5100 down here, I don't know what else you look for. I mean, frankly, I'm not a big moving average player, but I know that a lot of people are, so I kind of cover things that way. So, but a lot of people are big into moving averages. Clearly, those two supported this thing. It's moving up off of those. The Mag 7's sort of doing the same. There's only one more SMA in its way, and it'll be above all of them again. It's really almost like you really can't ask for more in terms of a nice little pullback after the run it had. Take the overbought and stuff, get ready to go at the right time of the year for the gang. So it's coming off of, right, kind of lower readings in here where it was knocked down into the lower 40s. You don't really see in a strong stock, in a strong market, you don't really often see some of the leaders get below 40. So, you got a pretty good number. That's why it's sort of like the fuzzy logic thing. Like you got down into 43 and change. So you got to sort of take that, right, and say, well, that's for this kind of a stock in this kind of a market, that's oversold. That's about as close as I'm going to get. So that's what that looks like right there. The SMH looks primed. Again, I'm not predicting. I'm just trying to be objective and say, if you took the snapshot in time of all these things right now and look at bigger picture stuff, it's all primed to go. So it's really, I think really the charts are going to be surprised if Powell drops some sort of a bomb in the middle of all this. That's the way that it looks to be. But remember, they're only reflective of the market participants to whatever degree. And those participants tend to get ahead of themselves bullishly, mainly. And they tend to presume things about rates and tend to be wrong a lot. So you have to always factor that in. So let's make sure we covered everything I don't think we did cover everything. Let's double check just to be thorough here. Let me get us here. So we know what's up with this. We talked about rates. We talked about probabilities. We talked about sentiment, right? You're not really at extreme greed yet, right? You haven't gotten there. So you're kind of just below the extreme greed levels. So you haven't really gotten there. If you look at some of these, like this is the percent of stocks above the 100-day. Now it's middling. We do the 20-day, right? It's with this big picture view. I know it's ugly looking, but it just gives you an idea really over time where you've been. You got up there. We know that because of what happened in November, right? Nothing shocking there. But if you really look at like the 50-day, you're up there too. And if you look at the 200 and the 100, though, the big dogs, those have more room to go, right? You can see that there's your 200. So you really have a lot more room to go there, right? So that's why it's sort of, to me right now, this is mixed and sort of at odds with each other. The bigger picture says there's more to go. The 50 and 20 say, no, you need to kind of back up a little bit here. You've gotten a little bit overdone, but they're not extreme at the same time, right? So that doesn't really, I don't think, offer much to us. We already talked about what happens, right, in all years. December tends to be good. And we are coming up on the part of the month that starts to put the bottom in, and they usually launch from here. And then we're in pre-election year right now, which is the black line. That tends to be the same thing, but only more so. So just keep that in mind. Only more so is the rally, right, in this particular year. Typically, we looked at this. Excuse me. I'll mention this again for anyone that doesn't track this video each week, but right, just remember the expectations. Once the Fed starts cutting a year later, you're down about 10% as per history. Look at what happens when we get to 250 on this graphic. So once you get to the 250 after, following the Fed cut, um, the first part of the cutting cycle, you actually go down because it's the Fed is late in acknowledging that there were a bunch of signs that were there that showed deterioration that the Fed and missed. So seemingly like the Fed missed and Wall Street missed and FinTV missed and all the usual suspects, of course, missed. Excuse me. So just keep that in mind. So we covered that. That's covered. Let's make sure we get everything covered here. I talked about the next realistic target is the all-time highs. We said that 4 to 5 weeks ago. There's no change expected now. This calendar we've been following, the performance has been worthy of our attention. Just again, it calls for more end of year performance and a good start to 2024. So people like the hedge funds that are selling the Mag 7 right now, again, I think they might be right, but if they're wrong, they're really putting themselves in a bad spot where it's going to be hard to get these levels, get back, right? Buy these stocks back if the normal patterns play out. XLK, I didn't show, but SMH and XLK, if you want to look at just the sector technically and SMH, the semis, if you look at these, we already looked at that. Look at this. I mean, it's on the cusp of breaking out. Right now, I don't know if it will. People could be hesitant in front of Powell, but if we go back and just show more history here, excuse me. Excuse me, sorry, this will not let me go. But you can see this is a 5-year weekly. This thing's breaking out. Now, I'm not saying it's not overdone. It's probably a little bit overbought, but it's not terribly overbought because of the way they've handled it as well. So it's very hard to say bad technical things about it when it's doing what it's been doing. I just can't. I can't. I don't want to try to. There's no reason for me to try to get the technicals to fit my economic take, right? I'm just trying to be objective about these. But even if I were trying to really shoehorn some bearish thing in to fit my take economically, I can't do it. I mean, there's a little bit of slight divergence. Well, this hasn't rolled over yet. It's still held the 20-day there in white. That's usually a pretty telltale sign for the moving average people that things are still pretty good as long as you're holding that. And look, all your SMAs are pretty much upsloping. Maybe with the exception of the 15, I don't know, but it's not even worth checking out. Long-term, short-term, they're all upsloping. So it may not make any sense, but this is what's happening. So what else can I cover that would help out? I'm trying to think here. We talked about everything. Yeah, so I guess that's it. Honestly, that probably is about it. We covered it in some weird way, like I always do. It just it's very hard for me but there's so many things going on out there to really distill this down. But to what I think is worth mentioning for everybody each week. But on the one hand, right, I think you could see without going into even more detail that the charts just do not look like bearish charts at the moment. It would really be a Powell. I think it would really be a Powell or geopolitical induced situation to really have these things turn around. The diamonds are overbought. They are probably one of the worst offenders, right? So they're at 76 on your daily. So if you're worried about, want to get worried about something and look for something to pull back, and you think is overdone, I think that would be the case. Now, IWM, which I was arguing for the longest time, is sort of somewhat of a canary in a coal mine because those companies can't play the games that the bigger companies do. But look, the rates really topped out somewhere around here. This is it. I mean, the rates topping out. Smaller companies that need access to capital at better rates, they're doing far better as a result. So this is why I keep saying keep an eye on rates, keep an eye TNX, whatever you want, dollar, DXY, keep an eye on that too. And the other thing I probably could mention here is just the VIX made a new low. The VIX made a new low for the year on Friday, which is also kind of like a multi-year low as a result. So the VIX goes out actually at the low, which is a new low. And so this is a sign of complacency, yes, but it's also a sign of apparently people are not even worried about this Fed meeting. And that really gets me a little concerned, because I feel like if I put my cursor here, you can see that we've got to go back towards here. We've got to go back several years to get VIX readings lower than this. And you could you could see what happened not too long after that one. But you have to be a little worried in the back of your mind, because there's a lot of complacency, I think, as a result of this. But this is a hard chart to like, right? This to me is a chart that looks like it's about to break down to the next level. And I was about to say that, and I didn't realize. I knew it made a new low on Friday. I just didn't realize it closed at the low, or basically very close to the low. Thinkorswim seems to think it was a low, but this doesn't look. I mean, that is not a bullish looking chart. We know that this is not really the same kind of thing that you can really chart. I think in the traditional ways, it doesn't really lend itself to charting in the same way. But it doesn't. I mean, regardless, it just does not look good. And how could anyone be surprised if the Fed and geopolitical are news neutral, right? If it sorts out where no harm done by Powell, nothing erupts geopolitically, et cetera, from here until the end of the year, I would think the VIX is going to make new lows. I think the VIX heading down to below 11 would seem like a possibility. And it's not as if it's relatively rare in the last few years, obviously, but there were times in my career where the VIX was down there, and it wasn't like anybody was shocked by that, right? It just does happen at times where you really get that low. Here's an 8 reading, it looks like, back in here. So yeah, you don't get all that much lower for too long than say 11 or so, and maybe that's a great spot if you're in the Phoenix portfolio where you decide you're going to step in with some stuff. But again, right now, like you could have a real drubbing in if everything's news neutral by the end of this year, and that drubbing could last, because if the Fed seems like they're in line with what Wall Street is expecting as of right now, there wouldn't be any surprises. And knowing that fourth year, the election year, tends to be pretty good all the way through May, and again, without geopol or something, if the FOMC and rates and the bond market and stock market are all sort of on the same page, and everybody thinks it's pretty much they're in tune with what's really happening, I mean, this thing could get clobbered even further. So that's one reason why Ron, our friend that passed away, and Ron liked to accumulate volatility when the VIX got low. And I think if you're a market maker or you're a desk trader and you're sitting there managing your positions, I think he's right. It's just very hard, I think, for an individual trader just to start piling up outer month volatility unless you can really do a lot of gamma trading. It's hard to really, I think it really is hard to do that and keep your decay at bay. You've got to do some clever short-term selling of premium to offset it. It's just it's in time intensive, and that's fine if you're a professional sitting there doing that kind of stuff all day long. I just think it's hard. So I think when you start to see cracks developing technically, is when I would tend to be more about doing that rather than having it all the time when things are low, because they can stay low for a while. As we saw, you can get months and months and months of VIX being really just flopping around, doing not very much before it bursts, and that means volatility usually stays pretty tamped down. But that's a Phoenix portfolio discussion. I think Ryan and I are on the same page. We didn't really fight with Ron over that, but it was really more of Ron. I just think I think Ron just thought people should just sit there and do this stuff all day. But again, a lot of people are trading around other things they have to do, and it's very hard, I think, if you're focused on directional movement and you've got other things going on, other businesses or responsibilities, for you to also constantly have to deal with flipping shares around gamma wise to beat back that theta, right? That's by owning the stuff a little too early. So I would rather wait for cracks to develop and get in, because really the VIX spikes happen in the nearer term anyway, right? So if you're trying to catch that really strong volatility during a really rough stretch for the market, you really need to own stuff that's probably not too much further out than 2 months. You don't want to go too far out because you're not going to get the lift on the curve out there as nearly as much. Now, granted, each little tick of Vega is a lot greater, but you usually get a much stronger move in the near term, the weekly areas, and the first few months of the options availability. So on that note, I think I'm going to close it down here again. Sorry about the remnants of the cold. It still got me a little bit. I think I'm about 90% of the way there, but not fully out of the woods. I'll cover some of the sectors, but it's going to sound a lot like this, where I do think some things look good, some things backed off, some things are overdone. But again, we need to get the permission from the FOMC to either get a quick correction out of the system, right, of this market, so it can try to do its end of the year scamper, or it might just be they do a bunch of nothing again, and we deal with that, and then the week ends up relatively neutral or down small, up small, because they're not sure what to make completely out of the Fed. But if they have any chance, I think they'll still try to push the rally button for the rest of the year. I just think it's very hard to argue against that. So Powell really does need to pour some cold water on proceedings, almost intentionally, I would think, to really send this market reeling the way everything's set up. Could happen. We will have to see. I do hope that something I shared with you in this video helps you out in this upcoming week or week in the future. And I want to wish everyone a good trading week. Hopefully it'll be better than last week, because boy, that was a real drudgery, right? We just did not get anything great happening there. And that happens from time to time, and it usually does happen after a strong move where they consolidate, but just not a lot of fun, right, to sort of trade through this. I thought that they were going to try to pop this thing a little bit sooner than they did. I was thinking after a couple of days of pullback, my thoughts were they'd start rallying again. But the pullback really was sideways action and not a pullback. And then they finally got a hold of it on Friday for real, and took it to a new high. So have a great finish to your weekend, everyone. A great week coming up, and I'll see everybody that wants to check out the sector situation, which will also be brief this week. Everyone take care. Thank you.